Did you see what just happened with Broadcom, AVGO, and Apple? Apple announced their new Siri and the stock tanked. Well, went down. And AVGO came and beat the earnings and stock literally went down by $100. Something doesn't look right. I'll try to keep this short and to the point so we can actually learn something from this. Mixed but leaning cautiously bullish while Broadcom's post-earnings sell-off and a sector-wide 13 billion warning create near-term uncertainty. Analyst upgrades, institutional accumulation, and a 40% valuation discount suggest many see this as a buying opportunity. Morningstar's designation of Broadcom as a top pick at a 40% discount presents a potential value entry point for long-term investors, particularly if AI asset growth materializes as HSBC projects. NVIDIA, Palantir, Micron, and Broadcom issued a nearly 13 billion warning that is sending shockwaves through Wall Street. Billionaire investor Ken Fisher has ranked Broadcom among his top 11 dividend stock picks, highlighting its income generation potential alongside growth. Institutional investors and smart money are accumulating Broadcom shares following the post-earnings sell-off, according to multiple analysis. And all of these are latest. You can see 11 hours ago, 7 hours ago. Cathie Wood, you heard about Jim Cramer, Inverse Cramer? There's another thing called Inverse Cathie Wood, for sure. Because whatever she buys kind of goes down. I don't know, for whatever reason. Cathie Wood purchased 8.7 million worth of our tumbling semiconductor stock, sparking speculation about potential undervaluation in the sector. HSBC raises Broadcom price target on AI asset growth. I'm just putting it out there for you. And if you look right here, Broadcom is sitting at $401 pre-market. Doesn't really make sense, right? The beat earnings, and same thing happened with Apple. However, if you pay attention, it's a surprise. It's not really much. They didn't like blow everything out of the water. 0.04, which is like 1.82%. Surprise 56.7 million, 0.26%. However, AVGO, Broadcom, long-term, it's a solid company. I don't hold this, but I'm looking into this, matter of fact. The dip looks juicy, and as usual, you can't time the market. You can always buy the dip, dollar cost average on the solid companies. I don't think I can say that for every other company that's coming out with the .ai name and mooning. Broadcom, AVGO, best sales and EPS estimates. Semiconductor solutions revenue soared 79% year to year. Broadcom said AI semiconductor demand guidance fell short of investor expectations. Investors are expecting quite much. And if you pay attention, most of the semiconductor stocks have skyrocketed significantly. So this is kind of normal, but I do see a lot of hype in this space. And that's why I've been a little skeptical. If you watch my video, I've always said this, prompting market concern after its quarterly report about weaker than expected AI chip outlook. So this is Broadcom. And ladies and gents, this is Apple right there. The irony. Apple unveiled AI updates for Safari, tab grouping, page monitoring with update alerts, and new Siri, and the stock tanks. And this is the pain point to pay attention to. The WIX at 21.51. WIX actually went to 21. Right now it's sitting at 18 pre-market. Indicates elevated market uncertainty, making it difficult to price and place asset-backed securities like bonds backed by French SME loans. Issuers may face wider credit spreads and lower demand from risk-averse institutional investors. What happens when NVIDIA's CEO is telling to buy the dip? Not making this up. Jensen Huang is saying, yeah, it's good time to buy the dip. The CEO of AI company or hardware company who actually benefits the most from all the AI surges is telling us to buy the dip. The last time one of them said something like that, it didn't age well. Justin, Bank of America says investors should take profits, citing too many red flags in the stock market. Not that I agree with Bank of America, but valid points. Breaking, Apple stock falls 5% from its high of day after unveiling Siri AI, its biggest AI release ever. What's really happening? I told you, we gotta be very, very careful. And last but not the least, if I have to leave you with something, I discovered this individual, Ed Citron, recently. He has some valid point. Being an AI practitioner, believe it or not, I use Claude and quite a bunch of stuff. I love it. I wouldn't want Claude to go away, but I don't know how they're sustainable, charging so little. And the IPOs that's coming up, God knows what's going to happen. By the way, I will be doing a SpaceX video sometimes tomorrow or day after, just before the IPO. Stay tuned. I'll give you some pointers to pay attention to. I'll tell you if I'm buying or holding or whatever, so please watch that. Ed absolutely destroys the SpaceX, Anthropic, and OpenAI IPOs in 5 minutes, and he has some valid points. He explains why they're all trying to cash out because the entire AI narrative is a lie. Kind of breaks my heart, but truth is the truth, man.
By far, is that the con is the financial side. The con is the fact that most people's experience of AI is unrealistic when it comes to the cost. So you using ChatGPT I believe the subscriptions will go away. I think we are just at the dawn of token-based billing, meaning that most people's use of Claude Code, for example, is based on a relatively unlimited, you can burn between $8 and $13.50 for every dollar of your subscription in tokens. So most people's experience of AI is separate from the cost, divorced from the cost. And this was a deliberate con on the part of Sam Altman and Dario Amodei, because they both knew that if they actually made people pay on a per million token basis to use these things, they go,
afford it.
Wait, how much? Whoa, this thing messed up and I still had to pay.
I just said it, right? It's real. And I'm not making this up because, again, for me, I've used it personally. And I don't see how the cost adds up. Like, how can you be profitable by giving so much cheapy? Unless you have other plans to make that money back. IPOs? Maybe. I'm not saying semiconductor is going nowhere. I mean, yeah, there is demand. I get it. There's demand. But let's see the other side as well.
Hey, and you're kind of seeing that already with the enterprise customers, the Ubers and Walmarts of the world who are starting to have to pull back.
This is the token maxing, soul searching we're seeing going on right now.
Well, the thing is, Uber wasn't token maxing. I don't think they had a leaderboard. I think they might have at some point, but they burned through their entire annual token budget in 4 months, in the space of the first quarter. And then their COO, Andrew McDonald, said it's getting hard to justify because you can't connect it to outcomes. We are years in. Why are we all acting like this is going well? It isn't. And so the experience of AI, the value judgments of AI are all based on phony metrics, an outright con about the costs, and quite frankly, a very weird psyop. The whole thing is a psyop. The cult of personality around AI, the very much, if you are in the out group and you don't like it, you're othered, you're different. You're a hater, you're a skeptic.
Yeah.
And it's frustrating because Silicon Valley is meant to be a place of meritocracy. It's meant to be a place where you're evaluated based on your value, theoretically speaking. Remember I don't know if you ever saw the GitHub thing, the meritocracy doormat they had?
No, I remember when they had like a White House.
Yeah, it looked like a
building.
CIA thing, which is also good. We love that. But the thing is, Silicon Valley is meant to be a meritocracy. Yeah, everyone coddles these things. Everyone talks about these things like a gifted child, like they're afraid that they'll get turned into an ear of corn, like that Twilight Zone episode for saying the wrong thing. And
I know. I watched your Bloomberg interview recently, and I used to work at Bloomberg. I'm very sympathetic to them. But the response to some of your criticism was very, but they're smart people who believe this. Like, surely it can't.
Yeah.
I felt a little bit like, is that the best AI defense they're going to muster? So I just want to.
No, I don't know. I'm not going to play the whole thing. You know what? Let's just
make sure. I mean, I think, argument number one is that AI is the AI companies talk about what they can do in the future, not what they can do today.
Yeah.
Your assessment of what they can do today is not that exciting. To the extent companies are using it, it's often subsidized.
That's all you need to know. Basically, it is hyped up. I'm telling you this personally, being a practitioner, it is hyped up to a great level. And the smartest people in this space, whether it's CEO and whatnot, who gain most of the stuff from the surge, why do you think they'll say anything negative? This is a sad place to live in, basically. Having a contrarian view based on real-time data, real-time usage. Yeah, it's very useful, for sure. But if it's useful to this level and valued at 1 billion, these guys are expecting $1 trillion valuation. That doesn't add up. We are being subsidized right now. $100 plan, token burns is probably 1,000 plus. So they have to come up with a different plan to justify that cost or make up for that money, basically. Or else, how does it work? Again, let's see how this plays out. Everything is like basically they're betting on the future usage, future stuff, forecasting. And now, when everything is kind of in red zone, we have the 3 greatest IPOs that's coming up. Again, I'm not a doom and gloomer. I want AI to stay. We were fine before AI. If it disappears, we'll probably be fine. But it's not going anywhere. The biggest players are in this space. So let's see how this plays out. But when it comes to the stock market, I will be very, very careful what you're getting into. Especially most of the stuff has surged significantly. Some of the Chinese companies have surged 2,000, 3,000% in the matter of 48 hours. It's insane. The markets are moved by animal spirits, no doubt. They'll print money to buy bonds and keep government interest costs down. They'll use fake inflation stats to hide this, but everyone will feel it. I'm amazed you guys still don't get this. They have no other option. Let me know what you think in the comments, and I'll see you in the next one. Bye for now.